the business is somewhat of a child to the business owner. It's not human, but it's a growing, it's a living, living company, and they have spent however many years, whether it's 5 or 55, growing that business. It's part of who they are.
Welcome to P&L, Priorities and Lifestyle, with your host, Rob Schultz. Rob is the founder and president of Schultz Wealth. All opinions expressed by Rob and his guests are solely their own opinions and do not reflect the opinion of Schultz Wealth Limited. This podcast is for informational purposes only and should not be relied upon for investment decisions. Please refer to our website for more information.
Welcome everybody to P&L, Priorities and Lifestyle. I am your host, Rob Schultz, and today I have with me Brad Purifoy, my good friend, and we talk to each other pretty often, don't we, these days?
Yeah, we do.
Yeah, we do. And Brad is an investment banker with CFA Associates, Corporate Finance Associates, or CFA, I guess.
Yeah, Corporate Finance Associates Worldwide.
There you go. And we've been, we've known each other for probably about 2 or 3 years, I would say.
Mm-hmm.
And you were the first podcast victim I had for this podcast. Did you realize that?
I vaguely remember. I think I tried to wipe that out of my memory banks, but yeah.
It wasn't that bad. I don't know.
You tell me you've improved, so we'll see.
Yeah.
I'm pretty sure I haven't. Not on the podcast.
Yeah. So I decided that we'd give you another shot at it, I guess. But obviously, we have a lot of other different things that we can talk about that maybe we didn't talk about back then. And things have changed. We're in a different office. So this is our Las Colinas office.
Expanded.
And I don't think we did video last time, right? For the first one, it was just audio.
I think you tried to do video, but there was a little snafu. So
it didn't work. Yeah, that sounds about right. Mm-hmm. Yeah. So here we are talking about things that interest business owners.
Mm-hmm.
Do you think business owners are interested in one day selling their business for a bunch of money?
You know, it really. I was on a panel the other day that I think there were 60 people in the room that were supposedly a good percentage business owners, and I made a comment that the first thing that I do when I get to know a new business owner, aside from just understanding what their business is, what it does, is really what their goals are. Because the answer is not the same for every business owner. And I made the comment that out of 60 some of the people in that room, probably everybody had some difference in what they thought an ideal outcome of a transaction might be. And that's because not only are their businesses different, the people in the room, but their shareholders are different. Some people are sole entrepreneurs that own a company that grew up, and others have family members as partners. Others have partners that are not family members. So what an ideal transaction really kind of just, it's deeper than sell my company for the most money. And sometimes it's just the making a smooth family transition. So sometimes there's no, right. Yeah. It's not really, they may never sell their business, but there are a lot of, family planning issues, which really gets more into your area with regard to transfers within a family.
I think that's why we get along so good, is because absolutely that's obviously what we see too. And I would almost say that in some cases that's the last thing a business owner wants, is to sell for a whole bunch of money. What they really want is to be a business owner for the rest of their life.
Yes, and it varies. So some people are relatively young entrepreneurs. They might be in their 30s or their 40s or even their 20s and decide that, now for whatever time is the time for a liquidity event. So meaning take some money out of the business. They may continue to invest in the business and run the business, but there's a lot of life planning that goes into what's the right time to do things in a business, and so it might be just the right time to take some money off the table. But when considering the sale of a business, I guess certainly, yeah, money's important, right? But usually there's some other factors that enter into the equation that we sit down and discuss with the business owner to really understand, because sometimes, okay, we start with the understanding that, okay, money's important, right? But sometimes the owner's going to roll, or oftentimes the owner's going to roll money back in, or there are multiple owners and maybe one owner is exiting, retiring, and one or two of the other owners are continuing to own pieces of it. So who the partner is becomes very important in that situation. You know, who are you going to pick to be your partner? Because that's really what it is.
Yeah, and I think that's a great point. So you were talking about, and you brought it up, somebody who's maybe in their very young, too young to traditionally just retire and just play golf every day. You're in your 30s or 40s or something like that. Or like you said, it's partnership, but there's a multitude of ages there. One is aging out per se, and maybe one or two are, they're not done yet. So absolutely, there's some other considerations when, let's say, like you said, they're going to maybe continue in this business going forward. They've taken some chips off the table. They're going to continue, or they're going to need to do something.
Even if they aren't continuing, almost every business owner, maybe every business owner that I've met, and I've been an investment banker for over 20 years, and I've done a lot of transactions, all sorts of businesses, and we can go back into kind of who Corporate Finance Associates is and what my background is a little bit, but every business owner has the unique situation for them. Recently, I was a business owner introduced me to a friend of hers that's they were in the same industry, and she said, "Hey, I'd like for you to talk to this friend of mine because she did a transaction a few years ago that has resulted in she's currently in a situation that right now she sees the wisdom, if you want to say it, of having a good team of people helping you with your transaction." So, and I can delve into that a little bit, but we always say, it's a complex thing, selling your business, not only about the money and about who you're selling it to, who's a good fit with your employees and your management team. What about the company culture and things like that? Well, in her case, she had built a successful business, and she falls into the young category. I had just this past week a Zoom call with her, and she's in her 30s and built a business. Somebody approached her and offered her on paper $30 million-ish. So generally, transactions that I get involved in are typically valued from $10 million to $200 million. That's kind of typical in size.
$30 million.
$30 million it's a big transaction. Yeah. So any transaction to a business owner of any size is an important transaction. So that on paper, it was a $30 million. This is just verbal conversation. It was around a $30 million transaction. But really what happened was they gave her $10 million up front, and there was a complicated structure by which she would get the remaining money.
Over how many years? About?
I don't know all the details, but there was an earn-out structure, and there was a minimum. In this world of business transactions, pretty much if you can think it and a lawyer can document it, which they can, it can be done. Not that it would necessarily be a good idea. In her case, she's found out after the fact that it probably wasn't the right partner. Yeah. They're not really aligned in kind of how they want to grow the company. And she did she's reinvested back into the company, both in terms of equity, in terms of getting a note from that company, in terms of getting an earnout.
Oh, wow.
So she's not received anything since the transaction closed. As a matter of fact, the relationship is soured and they've cut her off from all communication. So she doesn't even know, how well the company's doing. So there are a tremendous number of issues that need to be thought through. And the best advice I can give somebody, a business owner that's considering a transaction, is, have a team of people that surround you that can help you plan and do it right. So that starts with, really what you do, the wealth planning side of things, and understanding where the value of the business fits in the overall value of that person and their family's finances, and what a sale of the business, whether it's a full sale, 100% sale, or a partial sale, what's the expectation? And there are planning things that can be done if you're early enough in the process. And you have lots of podcasts that talk about this, but creating family trust for financial planning and things like that. So it starts with that. But you need also, your books and records are extremely important, because that's what a prospective acquirer has to really look at and try to get their arms around, other than walking through your facility and conversations with the business owner, are the books and records, the financials of the company. So those really need to be buttoned up. You need to have a good accounting firm. You need to have a good tax person. When you get to the point that you're considering a merger and acquisition transaction, it is extremely important to have an attorney who's well-versed in mergers and acquisitions, and not just every once in a while, but does it all the time.
Yeah.
And my role is to come in and help that business owner find the right partner, or the right sale to the counterparty, and to maximize the price at which it's being done. So that involves a lot of steps. And, we're not really, I don't think we're planning to go through it on this podcast, but it works. It's we've done, my company, over 5,000 transactions over 60 years. Pretty much, you've never seen everything. And I haven't done 5,000 transactions, but I've done a lot. And there are just a lot of lessons to be learned along the way, and you don't want them to be learned on your transaction as the business owner.
No question. So yeah, having an experienced team is super important. All right, so I'll put you on the spot a little bit, but not really, because I kind of know some of these answers to this because I've worked with you. What do you think your greatest strengths are as an investment banker coming to the table and helping a client?
Oh, there's so many. No.
There are, actually.
No.
What do you think that you do really, really good that a lot of times the business owner can't do for themselves? How about that?
Going through this process is super complex, because you want to find the right party, and you want to negotiate the best deal that you can with that party. And you want to, at the end of the day, particularly if you're staying with the company, for the relationship that you have with them at closing is good. So there are a large number of components of a transaction that an investment banker that's been in the business a good amount of time can help coach. Coach is maybe the right word. Educate to some extent, but also coach a business owner to not. So as we're going through a process, and there is a process and we can back up on that in a little bit. But generally, if things are planned out in advance, what we're doing is we're creating a marketing position for the company, and We have a defined list that the business owner approves and participates in, and we're reaching out to that defined list of companies to market the company. The defined list are companies we think fit, or private equity groups, or family offices that we think fit, and then we reach out to them and begin talking to them about the process. Now, about the company and why they should pay attention. That's vastly different from posting companies for sale on the internet, or if a business owner is approached, which happens all the time these days. Phone rings, hey, we want to buy your company. We like what you do. We have money, et cetera, et cetera. Well, that's what happened on the one I described a few minutes ago that has turned sour.
Yeah,
so
sure.
What I was going to say is that as you go through the process from that beginning to the end, which is the wire transfer hits your bank account, there are just so many things that are thrown at a business owner that unless they have been through this type transaction before, it's somewhat overwhelming. So it's a coaching to help them understand what's coming, what's next, why are we doing this? Is it normal for them to ask for this information? Can I provide that? The answers can be different for every situation, but we really work as a team, and so from a strength, I think it's a help coaching, and then there's from the negotiation standpoint, you let the process to some extent help with the value, but there's also, in my view, to maximize the value of the business, we need to make sure that prospective acquirer really understands what they're looking at, and that there are no surprises once they call in their due diligence team, their accountants and their attorneys, and whoever, whether they're environmental consultants or IT consultants or HR consultants, whoever they call in, they won't find surprises. That's the goal. Because if they find surprises, then guess what? That's coming back with reduction in value proposals. So we want to position the company as best we can. And then, yes, there's persuasion elements and understanding elements throughout the whole process. So I don't know if I answered your question, but there you go.
You did. There were some answers in there somewhere. Let me see if I can pull them out. So first of all, and I can just say all this just again because I kind of know you, we've worked together, is that coaching portion of it. You've been there. You have the experience. Obviously, you come out of the accountant CPA world, so you know all the details of this kind of stuff, which is really important, complexity and so forth. To me, it seems like, and I don't know if you think of yourself this way or not, but I think that you are an incredibly good negotiator. And I think there are two parts to that. One is that you're really good at it. Like, I don't think I would want to negotiate with you on anything, because you come at it from that real factual standpoint, very non-emotional, and just hear the facts, and here's kind of what it is. This is where we're coming from, and then it's on their side. It just seems like you're very, very matter of fact. Maybe it's that Corsicana small town guy that can come in there and do that. I don't know what it is, but you're really good at that, I believe. And I think personally, it's really important that a business owner themselves not be put in that position.
That's right.
For two reasons, or more than that. One is they can't help but be emotional when they're being challenged on their information and on the strength of their company, right?
That's right.
Very hard, if not impossible, but you're able to do that. The other reason is, which you alluded to, is more often than not, they're going to have to work with each other after this.
Even if they're staying behind, even if they're leaving the business and going to be on the beach, there'll be a transition period. So
absolutely. So it'd be nice to be able to, not have that emotion and be the person having to draw the hard lines in the sand. Let that be somebody else's job, So you come in after the transaction, everybody can have a working relationship.
Well, and they're just, yes, there are a bunch of situations where that can come up, but right, if you're the business owner sitting across the table from the person that's buying your business, and they tell you that here's what they can do, here's what they can offer, and that's kind of it. You're put on the spot as the business owner, versus if you have someone that is really helping to manage that process, that can tell that other party, well, thank you for your offer. We're expecting the rest of our offers in the next couple of days.
Yep.
We'll review them, let you know where you stand, etc. That changes the entire dynamic.
Well, you take
from
all the control away,
Mm-hmm.
and I think that's huge. I was just thinking, I have a deal kind of going right now, and they don't have representation, which is or isn't okay. Who knows? But there's responses going back and forth, and there's the existing owner, responding to things in red and all caps on stuff, just because you cannot get the emotion out of this stuff when it's your baby.
Right. And if somebody right, if somebody says, well, your
baby's ugly,
your system is not, your accounting system or your inventory system or whatever is not up to snuff, and it's like, you just put that in last year, you think it's the greatest thing in the world.
Absolutely.
But so you're right, somebody saying, your baby's not that attractive, and for, in a lot of ways, the business is somewhat of a child to the business owner. It's not human, but it's a growing, it's a living, living company, and they have spent however many years, whether it's 5 or 55, growing that business. It's part of who they are.
It's founder owner for sure. Breathed it into life. I mean, that's
even second generation,
Sure.
Third generation. It's a little different than a founder owner, but they put a lot of blood, sweat, and tears into that business. And certainly money's important, but there are a lot of aspects that come into other than the headline offer of, this is going to be $100 million transaction or 50 million or whatever the number is. There are a lot of details. Certainly that headline number is important, but okay, is that cash, or is that $100 a week for the next 1,000
Right.
whatever? And a lot of details.
Yeah, that's right. That's right. Okay, so where we're sitting right now, just now coming into the second quarter of 2023, obviously a lot of things have been happening. Interest rates have come way up. M&A activity has never been as hot as it has been probably the last few years. I mean, it's just been really good. What do you see going forward? I know nobody has a crystal ball. They always ask me about a crystal ball. I'm not asking you that, but kind of what do you see with the interest rates up a little bit, potentially maybe a recession this year? What do you see as far as deals, valuations, things like that? You see any major shifts or changes?
It's always evolving, I would say. And
Yeah.
You're right. The last several years have been good for business owners.
Did I miss it? That's a question that some people may have. It's like, I wasn't really dressed up and ready to go this last cycle. Did I miss it? What do you think?
No, I don't think that's the case. For every business is different. Every industry is different. Cycles don't necessarily run the same. Cycles don't necessarily run the same as interest rates do on some businesses. But for the most part, particularly with a private equity acquirer, but they're also a strategic acquirer, it's relevant what the interest rate is. So I would almost say no private equity group is going to buy something with all equity, or if they do buy it with all equity, they plan to refinance it down the road. Yeah. So the interest rate, impacts cash flow. Cash flow is what drives how business is valued from a high level. And then it's a different discussion, or more in-depth discussion about what besides the cash flow of a business makes, what impacts its value.
Mm-hmm.
And, there are things like how fast is the company growing? Is that going to continue? What's the risk profile of this business, et cetera? So in any economy, a business can be sold. The price and terms under which it would trade hands does change some over time. Again, I've been in this business for over 20 years, I think 22 now, something like that. And I've always seen businesses sell. Now, when the economy completely collapses, which has happened a couple of times, and the banks, the lending arms in this, and it's not necessarily just straight up banks, there are lending entities that get involved of various types. When they turn the faucet off for the debt, which can happen, then that really, again, things still trade hands, but that really does cut the flow of transactions.
Have you seen any of that?
So what I have seen, and really from discussions with lenders that I know, is okay, what's going on in the back office? And what I'm hearing is not so much from the interest rates part of it, but just until we're a little further down the road, the underwriters, the people in the back rooms that really have final approval, that are doing a lot of the legwork to determine whether the bank or lender is going to make that acquisition. They like to see things that they can see are recession resistant, or better yet, recession proof.
And that's certainly on, you're obviously your big bank lenders for
Mm-hmm.
sure, just because of kind of what's been going on, with SVB and all that kind of stuff.
Mm-hmm.
But you alluded to that, there are other lenders,
Mm-hmm.
there are non-bank lenders that have a big role, in this environment. Have you seen any of that spigot turning off or getting tighter?
It's not turned off. So no, the transactions are still occurring. I have transactions going on right now that are in the due diligence phase. So transactions are occurring. What I would say is that yes, both a potential recession and interest rates weigh into the minds of a prospective acquirer and the lenders that are involved, kind of all parties. So it goes into the planning aspect, I think, for a business owner to decide. Sometimes now is just the right time to go to market for whatever the reason.
No
It's like we need to do this right now because your business might be doing fantastic and might have the legs going forward.
A lot of them are doing
right,
really good.
and going forward, the picture still looks really good. Well, I wouldn't dissuade someone from going to market under those circumstances right now at all, because you don't know. One of the things you mentioned, the crystal ball. We don't know what the crystal ball holds 2 years down the road. Looking back 2 years from now, right now might look fantastic. So, as a time to sell the business. So, there's risks of going to market now, and there are risks of holding the business. And you really just kind of have to look at those. In an ideal world, your company's doing great. The economy's doing great. The economy for your particular industry is doing great. And now is a good time for you to do a transaction, just your point in your life. So rarely do all those things line up perfectly. And I'll say one other thing too, is if your company so buyers are smart. I mean, people that buy that, whether they're a private equity group or an industry player that really knows your industry already, they can judge where you are in a cycle, if there's a cycle to your business. And if they put yourself in, I always say, put yourself in a buyer's position. So you ideally want to have, as a buyer, that you still have some going up to do before maybe things hit a cycle, as opposed to you're just you're at the top of the roller coaster looking straight down. As a buyer, that impacts their thinking.
That's a great point because, a lot of times, one of your options, you can sell or you can keep it and make those profits yourself. And you're looking at, oh my gosh, we're gonna have a great 23, 24 looks even better, 25. Why don't I just hold on to it and I can reap all those profits myself? Always, obviously, part of the decision matrix. But as you alluded to, the buyer knows this stuff too.
Well, and the Texas, right? We see, so part of Texas is we have West Texas and other parts that have oil and gas activities. So not something I specialize in, but we do see those from time to time. That oil field services companies. I remember I had one call me a few years back and referred to me, and he's how's your business doing, et cetera. He said, well, we did $40 million last year. It's a good year. Been doing $40 million, the sales, I think it was, for the last several years. Fantastic. How are you going to do this year? Well, I think we might be about 2.
Yeah.
And so
Yeah.
I said, well, okay, we might have should have had this conversation, a year or two, 2 years ago. So in that case, he would have to wait through yet another cycle, if his company was going to go back up, to get back to where it was. So again, it's different for every company, and as a business owner, you have to sit back and look at it from different angles, and then also gut check yourself whether now's the right time, and just be honest with yourself.
I like that. Let's get back to interest rates because I think it's kind of interesting. So you and I both obviously think very much alike as far as what a value of a business today represents. It's the same as stocks, which we trade in here all the time. The current value represents all known future outcomes. In other words, it's a series of cash flows that's your present value to come up with, what the value of a business is. So, for instance, my business, I don't run it with any debt or anything like that. So, what do interest rates really have to do with how much I make or don't make? Not really that much per se, right? So, I have, I can project out my future cash flows based upon that. I don't have any debt that I need to deal with or pay for that. If somebody buys me and uses debt, their projections are going to be very different. Is that true or false? What do you think about that?
Well, you're kind of getting into the weeds.
I didn't mean to, but yeah. I don't know.
So I'll answer it at as interest rates go up, inflation's going up. So in theory, right? And I mean, it's true. That a buyer is buying what they're buying is the future earnings of your business. So as the owner, you get to keep your earnings through when the transaction closes, and from that point forward, it's the buyer's business, or maybe you own a piece of it. But so if you look a year down the road, $1 earned a year down the road is not worth the same amount of money as $1 today.
Well, that's true.
That's inflation.
But he has carry though, and I didn't. That's all I'm trying to get to.
But still, when you're discounting that $1 back, you have to take into account that $1 a year from now is not worth what $1 today is. So you've got to factor that into discounting it back.
And that's a higher factor.
That's a higher rate, which means a lower value that it is today.
So in essence, it kind of evens out to a certain respect, regardless of whether there's carry on debt or not, a higher interest rate environment, just in reality, it affects the discounted cash flow calculation that you kind of come up with.
It does. But buyers look at businesses all sorts of different ways as to what's an appropriate value. I have a client that they have a strategy to acquire other businesses in their industry. And they say that any objective observer that really didn't understand what their strategy is would say they were overpaying by crazy amounts to buy that additional location. But what this company knows is that, okay, that's what it's going to take to get that transaction done, because the owner, for whatever reason, that's just where the trade will occur. It doesn't make sense on a discounted cash flow basis. It doesn't make sense on a traditional multiple of earnings basis or anything like that. They know that they're going to come in there and they're going to replace all of their systems to make them way more efficient, on purchasing and everything else that they do. They're going to train the employees that are in smaller markets that don't get the same level of instruction and training and how to be more efficient in sales and closing sales and all the things that go along with it. So they've seen it over and over that they make an acquisition that seems way overpriced. Buyer's happy. I'm sorry, the seller's happy. They got a good purchase price for the business that they built, and also the buyer's happy because they know that 3 years from now, that price is going to look like it was a bargain. So there's no one size fits all. I don't know what your question was, but that. No, so it's not as simple as interest rates. That's what I'm saying.
It's not necessarily just
Another I'll give to you is let's look at a publicly traded company that's buying a privately held company. So another way they can look at it are accretive earnings, right? So if they're trading at an EBITDA multiple of 20 times, they could pay, I'm going to make up numbers, maybe it's a market where, something normally trades at, 10 times, but they can afford to pay 12 times. And still those earnings, when they're pulled into their company, will immediately get an upgrade. Likely, that's part of their, I think some public companies' assumption that those accretive earnings will now all of a sudden boost their stock price up to the 20 times multiple. So they pay 12, trades for 20. That makes sense?
Yeah, absolutely. Yeah, I think so. All right,
but interest rates are important.
Interest rates are an issue, and this is the first time in my career, your career too, probably. I think we're about the same age. I don't know. I think I'm a little older than you.
Nah, you're probably a whippersnapper.
I'm 56. How old are you?
No, we don't need to talk about that.
How old enough. Are you? Come on, you can tell everybody.
No, they don't need to know.
Okay, I'm going to find out how old you are. I'm going to send it out to everybody.
Perfect.
I probably know. I just need to figure it out. Okay, so first time in my career that I've had to actually deal with inflation. First time in my entire 28-year career that inflation has really been a true issue with regard to
it's been a long time.
How we plan, et cetera, and so forth. So, to your point, inflation and rates are important, and we need to put on our thinking hats and think about it with regard to how it changes our businesses, whether it's from the valuation of them or the operation of them. No question in my mind. That's a big deal. All right, I want to shift gears. So, you do, I know this, so you'll do transactions from about 10 million, and I want to say up, okay? Because would you do $1 billion transaction?
I never say never. I mean, our company
is. That's why I said go all the way up. But I also know for a fact that you do transactions in the hundreds of millions. So when we say 10 and up with you, Brad, we actually mean that to say that you work on some very large private transactions.
Look, what kind of a distinguishing factor for me, as well as my company. Yes, the earnings of the company matter, and the size of the transaction matters. But one of the things that I look at is who is the likely buyer of this company. If it's an individual, it's probably, if it's somebody who's buying a business as an individual, as opposed to a strategic or a private equity group or a family office or something like that, it probably means that they're buying it with a small business administration loan, which are fantastic for businesses of that size. It's just not the world that I deal in. I know a little bit about it, and I can be dangerous to talk about it, but to help educate people. But that's probably not down the strike zone for us. I can make recommendations, but really, yeah, it's those large, it's what we call lower middle market. It's businesses that have grown and are, probably pretty well known in their industry and their circles, but are still privately held. Could be second, third generation. Sometimes it's first. Again, multiple owners, single owner. Every situation is different.
Yeah, but I like that. So you specified it based upon, I guess you could say, almost kind of an institutional type buyer. It's going to be a strategic or a private equity or a family office, which is more of how we would call that more of an institutional level, not necessarily a person to person scenario.
Right.
Yeah,
that's really the defining thing. But so that's not say that if there's something that was under 10 million that we wouldn't help with that. We might be a great fit for that.
Yeah.
But only down to a certain size. And then we've certainly done transactions that are bigger. One of our offices did one that was a Berkshire Hathaway $500 million ish type transaction at some point. But yeah, just kind of bread and butter is what we said.
Yeah. So for owners of businesses, let's say kind of in that range that do think that they're probably a strategic target and or something that private equity may want to pick up and that sort of thing, and let's say that they're thinking, I need to see what this market might bear for me and what I need to do. After talking to their wealth manager about this. What do you think are some next steps that they could take to get an idea whether or not it makes sense for them to go through a process?
I really think talking to an investment banker is a good idea. So
and you're available for that because you've done that for us before. So you'll talk to somebody and also help them get an idea. You can even get an idea for maybe what a valuation range can be and some things.
Typically,
like
right. We have to get some information, and without a lot of information, we're able to usually give our thoughts on a kind of a range of values. So we obviously are interested in doing that for companies that we think could be a fit with us to take on as a client. But honestly, we go through that process and find out some percentage of the time, no, that company's not in the same position that we thought it was. So in that case, we're able to really kind of give some, at least our perspective or our thoughts on, hey, if you go to market right now and your company, just make up a number. Okay, so we can maybe. We think you're in the $10 to $12 million range on valuation. You, as the business owner, thought you were in the $20 to $25 million range. It can happen, and I'm not saying that we're infallible. I mean, we can be off, but typically what we're doing is giving what we would view as kind of where the market is for that business. Any particular transaction can, once it's marketed, you really can find a pretty wide range of values on the same business. So it's not that there wouldn't be a $20 million offer out there for that business. It's just that we don't think that the owner should go to market expecting a $20 million because that, in our view, would be an outlier. So that's the advice that we're trying to give. It's like, okay, that's possible. Now, if you want 50 million for it, that's probably not even possible. 20 million, maybe we find that buyer, but let's all sit back and be just honest with each other about what we really think.
Well, yeah. I've always appreciated that, having the opportunity to bring you in on different things like that. And the fact, I think it's super helpful because you're just always kind of out there. You know what these buyers look like, what they're looking for. You know what kind of transactions, and I can always tell with you. You'll be like, well, you know that, maybe sort of, but then you'll also, I know, come in and go, okay, now that is a very valuable business. We like that industry. We like what's going on. We know that there are people out there looking for that, and we need to sit down and visit. It's always been
Sometimes
very
it's
helpful.
well, sometimes it goes the other way too. So I had
But
a
you're being
company.
negative now. It goes both ways.
Well, I've had a company that a business owner tried to accept a transaction and go through it. That
Yeah.
we wound up with a closed transaction maybe 4 or 5 times what that offer was. So it was, I mean, so that was an example of an owner that just really didn't understand what the market might perceive with his business and his growth rate. And so one of the things that we sit back and do before we market a company is we brainstorm. I'll brainstorm with myself and with my partners and with the team, if you will, and certainly the business owner to say, no, okay, let's start with a blank sheet of paper, business owner. If you had all the money in the world, money wasn't an issue. You had all the great employees that you could possibly find to run the business. You had sort of unlimited access to do various things. How would you grow the business? What would you do? What would you do first?
Great question.
And what would you do second? And what would you do 10th? Because what we can then do, because we're going to, guess what we're going to do? We're going to go out and find those buyers that have money and that can help find the employees, or that
have those capabilities,
or that have the contacts.
Yeah.
Like, oh, you know what? We could quadruple the size of this business if we had a facility in Europe. Okay, well, where in Europe? We have a number of offices there, so let us look into that. So we can then build the case about, when we go out to market, we make sure that buyers know not only what the company is today, where it's been, how it got there, but how they can really put this thing on an even faster trajectory than where they were. And, again, we're all trying to we all are honest with each other. We're not trying to fabricate or build something that we don't think is real. But then it's up to me and the business owner at some point when they're explaining their business to the buyers that are sort of at the table at that point about, okay, let's talk about the future. What's your role going to be? How are we going to grow this company? Absolutely, you have those discussions. And if you don't, if you're a prospective business seller and you are talking with someone about rolling money into being a partner with them, and you haven't talked about how you're going to grow the business together, you're missing a big component.
I like that. Ladies and gentlemen, Mr. Brad Purifoy, Corporate Finance Associates, CFA. Final thoughts. So Jeffersonian dinner tomorrow night. You're fired up, right? You're excited? You're coming to my Jeffersonian dinner.
Well, fired up? I don't know. Maybe you got to tell me what the topic is. I don't even know what a Jeffersonian dinner is.
You don't even know what you're getting into, do you?
No, I don't. It's a little bit concerning.
All right, so we'll have to remember next time we have you on, we'll critique and see how the Jeffersonian dinner went. Brad, I really appreciate you being on. Appreciate your friendship, all the great work you've done for us and helping our clients and us be better. And super having you on today.
Absolutely. Yeah, I appreciate it. And
yeah, you bet. Folks, just want to remind you, you can subscribe. Get this in your inbox every other week. We're just trying to bring good content and information to the business owner, primarily around the topic of transition. And we appreciate all y'all tuning in. Hope you have a great week. Take care.
Thank you.